In today's video, traders, which is part 2 of our price action series, we're going to be taking a look at Fibonacci retracements and how to accurately use them or successfully use them on the Forex market charts. Stay tuned. Let's get into the video right now. Welcome back, ladies and gentlemen, to the channel. If this is your first time here, my name is Nick, also known as Trader Nick. I make all sorts of trading educational content here on YouTube for free. I do ask that if it is helpful to you, make sure you subscribe down below and also give this video a thumbs up. It really does help me out to grow the channel for more people to see it. So taking a look here at Euro New Zealand on the 1 hour chart, today we're going to be talking about, again, Fibonacci retracement levels and how to use them in combination with price action. After all, this playlist or this kind of series that we're going to be doing is all about price action, and Fibonacci tools just happen to be one of my favorite tools, so I could not do this series without talking about Fibonacci retracements. Now, before we jump into kind of Fibonacci, the Fibonacci retracement tool, let's just talk about kind of generally what Fibonacci is. Now, it is kind of a mathematical formula, and I'm not going to go into the details there because, you know, you could go watch a zillion videos on that on YouTube. But essentially, it's a mathematical formula, and it's found all over nature. There's different things that kind of use the Fibonacci sequence. And so the theory here is that a lot of times, you know, the markets respond to that. Now, whether or not that's true naturally, there is, in my opinion, a very strong case for Fibonacci because so many people are using it. When so many people look at something, a lot of times there's a self-fulfilling prophecy there. So something like a Fibonacci retracement, in case you don't know what I'm talking about, let me just draw one so you actually see what I'm saying rather than just sound like an idiot. So you can see here's a Fibonacci retracement. What you can notice about this tool here is that you drew it from, and I'm going to go into a little bit more detail, so bear with me here. What you can see here is there's a couple different levels, right? There's a 61.8% level, 50% level, a 38.2% level, and all of these are kind of pullback percentages. Now, very simply, I'll kind of back up and just talk about what I'm looking at here. I'll pull up a sketch pad because that'll probably help us out. So we're looking at a Fibonacci retracement, and what you do with a Fibonacci retracement is it's supposed to help you find pullback zones or pullback levels that give us some sort of support or resistance in a market. So what I did was I drew it from the high of a move, right, this area here, down to a low of a move, right? So this move here. See this big kind of red bearish trend that we kind of talked about here, or we identified with our Fibonacci tool? We drew the Fibonacci from the bottom of, or the top of this trend to the bottom of this trend, right? And we drew it, or we pulled the kind of from high down to low. We kind of just drew the retracement tool. And then what it did is it plotted our levels here. Right? You can see we got 3 levels in there. By default, there's more than this, but these are the 3 levels that I personally like to look at. So I'm going to teach those 3 levels: the 61.8, the 50% level, and the 38.2% levels. Now, these are levels of pullback, again, based on the Fibonacci retracement or Fibonacci kind of mathematical formula. Again, don't want to go into too much detail there. If you would like to go do that, you can go do a quick YouTube search about Fibonacci and you'll understand kind of why these levels here make sense. Now, 50% is not necessarily a Fibonacci level, based on the mathematical formula, but it is just a significant pullback level that we often see, right? So 50% of a retracement, what does that actually mean? Remember, here's our trend that we talked about, this red kind of big movement, right? That's our downtrend. And this tool is looking to help us identify where we may see a pullback to. And what you can see in this case is take a look at how price came up to that 50% level, right? If we look to the right here and we look left, you can see this area lines up pretty nicely, that 50% retracement or that black line there. As price pulled back, we found resistance right in that area. Now, what you can see here is that the Fibonacci retracement tool would have helped us find this particular setup, right? So we had a bearish move, a bearish trend. A Fibonacci tool is going to be helpful to you when you're trading with kind of the overall direction of the trend and looking for pullback entries. Really, the Fibonacci tool is just a pullback tool. Forgive my terrible writing. We'll clean that up a little bit. It's a pullback tool. It helps us find levels of structure in the market where we can find kind of retracement levels and we can get involved with a pullback at a calculated entry. Now, again, those three levels, that 61.8, that 50% level that we've butchered there and X'd out, and the 38.2% levels are all levels that are significant. But the first question people say is, well, which level is actually going to hold? Which level is going to be a pullback level that I'm able to trade? And that's where we're going to get into a little bit more detail with the Fibonacci tool, because it's not as simple as just saying, hey, every time it comes to the 38.2% level, I'm going to short this market, right? It's a little bit deeper than that, and we're going to go into a little bit more detail. But the first thing we need to understand about the Fibonacci retracement tool, guys, is that it is used in the context of a trending market. What do you see about here on Euro New Zealand? Well, you see that the overall market is moving to the downside. In fact, if I added a moving average, right? Let's just add a 100 period simple moving average. We'll make it blue. That's too big. Let's do a 50 period moving average. Much better. And you can see that the overall market is just trending down, right? The price is consistently underneath that 50 period moving average, whatever you personally like to look at. I'm not, I just chose the 50 because it kind of shows that the overall momentum right here is currently down. And so we have a market in momentum to the downside. This is going to be great where we can use our Fibonacci tools, because when we see a move like this, right? See how price kind of it had a nice solid trend. Well, when it starts to pull back, we could say, hey, we might actually see a pullback, and we could use Fibonacci to help us find a level of entry. So drawing that same structure that we had, you can see the 38.2% level as well as the 50% level looked really, really good. Well, why? Well, here's where we can use other factors. For example, if we insert a shape right here, take a look at what we see right around this area. And I'm going to make this pink. Make it light pink, pretty pink, right? And so as price pulled back, take a look at this level here. Not only did we get that 50% level retracement as well as that 38.2% level, right? Both of those were very nice Fibonacci retracement levels off of this downtrend. But look what else we had. We had a structural level of support that got broken, right? Remember, we're talking about price action. So Fibonacci combined with price action can be a beautiful little setup. And here's exactly why. Notice how price was holding this level. In fact, we had a nice little bullish pin bar there, beautiful little bullish pin bar there. We did get some sort of reaction, but overall price did fail. As price action traders, guys, the name of the game is to look for storytelling kind of aspects of price that are going to give us some sort of an edge, right? So price failed this level. It failed to hold this level long term. We saw a minor bounce and then a overall failure to the lows. This is telling us something about this particular market, especially in the favor of the overall long-term trend, right? The overall trend is moving to the downside very, very sharply. And we have a price action kind of indication here that sellers are in strong control of this market, right? We had a very minor bounce and sellers took full control of this market and sold through these lows, right? This level of support completely got broken. So what does that tell us about this particular level when price starts to retrace up into that zone again? This is what a lot of people will call a kill zone, right? It's a level of structure that has been previously broken, and as price pulls back into it, it can be a great opportunity for sellers to kind of hit this market back down. And that's exactly what we saw play out here, right? So as price came into that 38.2% retracement, as well as that 50%, see how this is kind of a zone? I often talk about price action not being a perfect science. There is such thing as zones, right? So we have a 38.2% and a 50% level kind of retracement here that both hit very, very nicely. Now, sometimes you're going to see Fibonacci work out even better than this. There's going to be really beautiful entries that they'll tag the 38.2% retracement and you'll see them just fall apart or continue the uptrend, whether you're trading this up or down. Fibonacci is a tool that you can use both in the shorting side of things as well as the buying side of things. So we saw something that was really, really interesting here, guys. We talked about the Fibonacci retracement tool, but we also combined it with the overall study of what this kind of series is about, which is more price action. This structure here, as price started to pull back off of the lows there, it came into a strong zone of what was support, which is now resistance, right? And that's exactly where it lined up with our Fibonacci tool. We had a beautiful little trade there. You could have managed your risk, right? For example, a simple entry that would have been, really profitable is, let's say that you shorted right along the 38.2% retracement. Let's say that this is your sell trade, right? You could have put a stop loss just over the recent structure highs, right? This level here. Let's say that that was your level for a stop loss. And for a take profit, we could have targeted, let's say, just shy of the recent lows. A nice little roughly 2-to-1 risk to reward, maybe a little bit less than that, maybe a 1.5 to 1 to 2. Or to 1, sorry, right? Our risk is kind of here and our reward is here. So a bigger reward to our risk. So the Fibonacci tool is not only nice because it can have kind of some really, really powerful levels that might see reversals, but they also kind of help you with guiding your risk to reward, right? So as you pull back into a market and price gives you a better entry, you can get involved and put structurally like over highs and over significant levels, or you can look for where to manage your trade and put a stop loss on the trade, and also where you could potentially look to get out of the trade for a profit. Let's go ahead and continue on, guys, and we'll take a look at another example of Fibonacci tools. Let me clear, I don't want to clear my indicators, but I do want to clear my chart here. So what we can see here is that in a downtrend like this, there's all sorts of opportunities. In fact, a lot of these kind of pullbacks would have been beautiful little entries for the retracements or for the Fibonacci retracement tool, especially combined with the price action that we can kind of see here. So overall, price is making a serious movement to the downside, but I want to give you guys an example to the long side so that we can see kind of both sides of the story. Take a look right here. Overall price was very, very bearish, right? But look at this, we broke to the long side. This could be a simple filter. For example, if you trade using Fibonacci tools, Fibonacci retracements, you could say that you only want to trade with the trend and use something like a 50 period moving average as your filter, right? So if you're under the 50 period moving average, you're only shorting the market. If you are over the 50 period moving average, maybe you only long the market, right? Something to consider in your own trading. But let's talk about this particular level here, okay? Remember I mentioned that sometimes Fibonacci works out really, really nice, right? And what we can see here is take a look at this. Price came, well, actually, technically the top of the trend is right here, right? So here's our overall move. Here's the start of our trend, right? And let's make that black, not green. So here's the start of our trend, right? Start. And the finish, we trended all the way up here and we trended all the way up to this point. So our start to finish, we drew our Fibonacci tool from low to swing high. And take a look at this. We pulled back to the 38.2% level retracement, found a bounce on that area perfectly, and continued higher. The reason for me showing you this, guys, is I want to show you that the Fibonacci tool by itself really can have a lot of strength. And the cool thing here is that it was also combined with the fact that, take a look here, we broke structural resistance. This 50 period moving average, which is acting as kind of a barrier for buyers, we actually saw buyers overcome that level and shoot up from that area. And in fact, once we started seeing the pullback, it came to the 38.2% level retracement, and we saw a continuation of this market. This would have been a fantastic trade if you got involved. You would have been in, right around that level. Stop loss underneath, maybe you say here compared to your overall target of something around 2 to 1. Something as simple as that would have been a beautiful trade here, right? And overall, the Fibonacci tool would have been a great way to kind of filter in a potential trade to ride this momentum, right? So as price action traders, we're looking for the story to be told and for us to be on the right side of that story, right? So when price started to break through this level, we started to see a really bullish kind of change in market sentiment, and the 38.2% level retracement on this Fibonacci would have allowed us to get involved really at a beautiful trade setup. Now again, combining Fibonacci retracements with other factors, for example, moving averages, candlestick patterns, support and resistance, that sort of thing, can help you in kind of guiding your trading plan. Maybe, for example, in your own trading plan, you have a rule that says you have to have at least 3 things line up in your favor in order for you to get involved with the trade. And from there, you manage your risk appropriately. So for example, just using Fibonacci tool as one of your tools can absolutely go a long way, especially if you combine it with some other price action based concept. Thank you guys very much for tuning into this video. I do hope you got something out of it, and I'll see you on the next one.